learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming in on March 6, 2020. And actually, the stock market is going to go crazy tomorrow and even coming into Monday. We have a lot to talk about. A few things snapped, a few things diverged. We closed down 969 points, 3.58%. We're still following the rate cut, the emergency cut that happened, as well as that bounce yesterday, the Biden bounce. And one thing is very for certain right now, nobody knows what's going on. So we should talk about what we do know. I have a lot of things I want to discuss. I did make plays that we did talk about yesterday, even though I didn't want to. I did a few different maneuvers with kind of how today developed. So I'm going to go over those plays. I got the keys for you, and I want to even look a little bit ahead, both midterm as well as the very near term, because tomorrow is going to be an opportunity. And I even have a crazy theory for you, and then which stocks I'm going to be focusing on tomorrow with the volatility and how we plan to play that. So we have a lot to cover. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. Tomorrow is Bring a Friend to Coat Day. Costs you nothing to join, but it's going to be crazy. If you need the news, you want to watch the plays, you want to learn, you don't know what's happening, we even get information. We actually have somebody in Vegas in the Colt. They got put on self-quarantine, and they were even calling in able to tell us that. So shout out to everybody giving us information, and you do not need to panic or anything. What you need to do is wash your hands. Actually, like seriously, just wash your hands. That's it. You good, baby. God is good. But shout out to everybody on stream, keeping it positive and respectful. Hopefully we see you there in the morning. And the most important thing you need to do, post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes? What are you holding? How do you feel about TLT? A lot of people have opinions. And if you don't know about TLT, if you aren't familiar, we have this watch list. No, but let's get right into it. Again, in all seriousness, this is going to be wild, but how we close tomorrow is going to be a big day. It could go up, it could go down. A lot of people are pointing towards the downside. However, all we could see by this last week and everything is that this is volatility. This is the pure definition. When Wall Street closes up 4%, then it sells off 3%, then the next day goes up 2%, then sells off 4%, then goes up 6%. It's telling you that the market doesn't know anything, that the market is confused. That's why there is such a divergence with buyers and sellers and prices. So this is the pure definition of volatility. So how we close tomorrow is going to be important to tell us where we go, because not only is that we're going to really just see the full week's move, where did we end after we kind of started breaking down, where was the final point we ended at, but beyond that now, this will be the first close of the week after the first emergency cut in over a decade. But essentially where we close at this end of this week after the cut, how it's done it historically, the first week, it lets you know the short-term impacts of really how well that cut helped, but kind of really what was going on in that situation. So the next part we're going to look for, the first month after the cut, and then 6 months, and then a year. However, though, continuing on this logic, though, you guys have to understand, we don't know what's going to happen. However, we do know something, and that is when the next Fed meeting is, and there is high expectations. So we've talked about this. We've been talking about this. This is the date to watch, March 8th, 2020. That's when we know there's either going to be a confirmation or a reversal or some sort of move from there. We've seen all of these Fed events. We know the market is pricing in a lot and what could happen before and after meetings. Either the market is going to throw a tantrum if it doesn't get what it wants, or the market will actually like what happens, and that will even let us know now too. If they cut again, that will be 2 rate cuts in 30 days or in a month. If you do get 3 rate cuts in a 3-month period, that is an economic warning. That will show you the curve on all the bonds will start to steepen. So even though we didn't invert, the fact that you go to a massive steepening state, which is caused by the Fed and the policy and expectations, that will be a negative sign in what that means for the economy and why they're stepping in. However, I'm saying this now. I'm not making you watch the video. I get it. You guys can't watch the live stream all the time. I mean, you can't give me 20 minutes a day on the watch list, but this is an event. We've talked about it. Spread in events. We know when the next event is, so we know how to even set up our plays. So again, this is going to talk about how we're even setting up this strategy and what we're doing coming into all these plays. I even made a few moves. I want to make sure I have exposure, but I want time as well as, what could happen with the short-term exposure. You got to be able to balance that, but stretch your dollar. When an event is going to happen that will cause big moves in stocks, how that could benefit you as an option trader. So as we start moving here, I'm getting time. That's what I'm doing. Again, hopefully you guys know, do not trade anything you see on here. I'm just showing you what I'm doing. I'm just sharing my thoughts. I'm a random weird guy on YouTube. Do not believe anything you hear on YouTube or the internet. Research it yourself. Think for yourself. And options trading surely who can lose almost of financial advice. Lose all financial advice, educational personally. Thank you. If you're not familiar, please check the watch list. Watch the second link in the description. If you're on the live stream, first link for the Streamlabs Bootcamp and Real Estate Course. Thank you. But what I'm looking to do, I'm looking to take profits, and just like we played the other down cycle earlier, I'm going to take profits on the way down if we start moving. However, that's going to be different than my TLT plays. So watch the watch list from yesterday. I outlined those TLTs. I do not plan on selling them. The only ones I'm going to plan on selling will be those Marches. Depending on how they move, they came out of the gutter today. But the only other option I will do is trim half of the Aprils coming into the Fed meeting, depending on where the market's at. And then I'm going to be holding those May and Junes. That's it. It's simple as that. That is what I'm doing. However, if your account dictates something else, you have different goals, different position sizes, that's on you to fly, baby. You can make a cool decision now and start to learn how to operate with what you got, especially if it's already up a lot. You got wiggle room, baby. But when to buy TLT, that is up to you guys, and that is going to be up to your position size. That's been the main play, and we've been playing TLT because of everything with the rate cuts, the market, and that is what further diverged today. And if I could show you guys anything, we have a play on it, and this is what I'd watch out for. Banks, you could even look at XLF as well, but banks got clapped again today. Even if you look at transports and other industries, the SPY is not back to these lows, so you're getting more divergence, and that divergence we talked about with bond, the market caught up a little bit to it. However, bond rates are still down, so if the bonds keep going down in the banks, that's not good here for the S&P or the Dow. So we like that TLT play, the TLT play before the market went crazy today. Even when the market kind of hit a high in anything, the puts didn't do much, but the TLTs were working. There's a reason why they have premium. However, I want more TLT, but I don't want them at these prices. If you're watching, you'll know when I get it, and that's when I think that it's going to be a good price, or at least a good enough price for the risk reward. But if you're like, I want TLT, I haven't got into it, I should have got more, I'm in the same boat as you. That's how I feel, and I want more. However, for the risk to reward right now, it's not, again, we've seen it. It's like I've been talking about, even some of the plays we made earlier. If I'm taking this extraordinary risk to only make 100% when the market is moving 3-4%, that's not it. It's not worth it. And then as we're seeing too, you'll get better deals as the house is still on fire, but people relax. We could get way cheaper insurance that will have a higher probability, especially if things come up. I mean, that's just what you got to see. We've added a lot more plays off of this bounce, and I've gotten way better positions than the original ones that we were in. And that's what I'm going to talk about here too, because I made moves on those. I sold old SPY puts today, but now the other puts that we got on the overall market, those have more time, and we're in a way better position than being so far out with now only 2 weeks of time left on the Marches. So there's that. And now here's my crazy theory. I want to say this. I just like to talk about this stuff. I'm seeing stuff kind of develop. We're at an interesting moment. I said I'll tell you guys when I see stuff. I don't want you to go crazy, but I'm not going to, and I know people will get mad or people will disagree, and people like to come back on these videos and say, you're wrong, this and that. I'm wrong a lot of the time, and I'm cool with being wrong, and usually I win when I'm wrong, meaning that's how we set up our strategy. I'm not a bear. I'm not a bull. I'm a colt. I'm a Chad. I just go both ways with stuff, and, we're doing a lot of ghetto spreads and making things free, so we're maneuvering. But here's my crazy theory. Just considering how this is set up, looking at the liquidity's low. China and oil started following together. Oil sucks right now. OPEC and Russia, it's not looking good. We're seeing stuff. The dollar's already made a big move down. You're seeing bonds, the rate cuts, and everything around the corner. And also the fact, and this is what I said, this is where I'm kind of putting it into play. We need awful data to confirm that the Fed is going to move. So even though the bond market is really, really saying that the Fed is going to cut, the Fed doesn't have to do that. Even though Powell has showed us from last August that he will listen to the market and will not upset the market, we don't know, considering the fact that they did an emergency cut a few days ago, and now the meeting's in a week or so. So my theory is there's going to be some awful news. It could be economic data. One thing I'm looking for, I posted it on the YouTube story. China on Saturday is going to release their balance of trade, and that's some of the stuff I've been talking about, as well as their foreign exchange reserves and other stuff, and that might bring to light the reality of the situation, and we can move down, but we could have a flash crash Monday. The only way that, and this is, again, my crazy theory, And how that would occur is if we sell off big tomorrow and we come in, it's the same logic as last time. If we come into this Friday selling off bad and now just considering where we are, then you have that data and then leading into the Fed, that's the only way I could warrant it. However, I'm going to keep my eye out for it. We'll see. Set up for both ways, but again, even then, I'm going to be taking profits on my way down if we get that down day. So we could turn a little into a lot if that happens, but let us get into the plays. So I have a few things I want to talk about here. One is just even how I'm playing this. I'm holding the TLTs. If there is any downside, we got a bunch of those IWM. So I have 200 of those contracts, and then I still have that other IWM play, but that March 20th 235 put, I sold that. That one had like a $75 to 35,000 max reward, but I sold it at 1,000% profit. I cut out $75 to like $800 today or $750. But we also took another couple $100 the week before. But why I sold those, just because they only have 2 weeks now and it's still pretty far at the money. But what I did, I'm holding those IWMs. So those IWMs, we got them the other day. They're still really expensive. Again, they're up 131%, and they're so far out the money that if there is a bounce, those will come cheap, and that's the time to really load up on them because those have till May, but they're still low probability, but the best protection is having time. So I got rid of the March 20 plays, and that helped me hold this play a lot more because I put a lot more money into that, and they're up. But it's all going to be about timing when it comes to finding these SPY plays. Again, you want to get it when the house is on fire, but what I'm trying to do now moving forward into tomorrow, I want to swap out my shorter terms. Those are the ones I want to look to take profit on, and then I want to get them into the longer term put plays, or if I take more profit, it'll let me hold the longer term put plays we already have for a better time. But I still want exposure to the short term and get in the money versus just flip the premium on far out the money. Volatility picks up even if it gets close. You saw what could happen with the UAL. We closed out of those today, $2,000 or 2,000%. So, and that's because they ended up even getting in the money. So the best part we could do here is balance it, and that's what I've been doing. That's the same thing we did with the TLTs. I have Marches, I have Junes. So that's how I'm going to go and set up this, and that's even going to explain tomorrow. You could even get good deals on some of these March 20th. So the point is you're taking risks, but like I said, if you have an event, that's where the problem occurs, because if you, whatever money you waste on short term that doesn't cover the event, you could have just put that 50, 60 bucks on further out the money, and then if we do get that big event and big move, you would have been better off. So it's finding a balance, but understanding, you can make a lot more better risk rewards on that short term, but then you're going to also get, a lot more risk. There's that. Besides that, I did make a few other plays today, and we'll start to kind of even show you. So even then, with how things were looking this morning, remember we had those bounce plays. We got this SPY May 342s, I think, or 343s. Yes, these were the ones. So they got kind of expensive today. And remember, we kind of bought these at the bottom there on the bounce. We bought them for 30 cents. They shot up to 128. They're at $1 this morning, but I ghetto spreaded these. So I had 30 of these. It was worth $3,000 this morning. And what I did instead was I ghetto spreaded these and I collected 2,000 cash. So what I did was I shorted the 345s. I got 72 cents on 30 contracts, about like $2,100. So now, no matter what, I've locked in $2,100 of profit. But now on 30 contracts with a $200 difference, I still have a $6,000 max reward. But now I made sure I secured the cash and I still have upward exposure for the bounce play. And that was good timing because the premiums were high. I got to take advantage of that. So that was the first play. Then I closed that Facebook credit spread at 30 cents. We got a 50% gain. That was from earlier this week. And then there was some more negative news. So as that broke, I did do a short-term play. There was news about 21 confirmed cases, and the news just was kind of getting worse. And this play was interesting because we made money on it, then we went down. But I grabbed a March 6 270 put, and we grabbed these, at $28, and then they shot up to 54. They kind of held, but then they came down. That's because they expire tomorrow. So this was the theta, but again, I wanted a $20, $30 exposure just in case because that news started coming out and the market was looking sloppy. But then the main play that I did today, this is what I told you guys I really liked, and you could tell because I got time on it. I was willing to spend a little bit more, but I said I like the dollar movements that we're seeing in Home Depot, and again, how the volatility is, and I think a lot of people agreed. Both puts and calls went up. There was still volatility, but I got these Aprils, these 165 puts. I grabbed 5 of them at 50 cents. They shot up, but again, even the premium at one point, they were trading at $1.40 in the morning, but you even look, buying them at 50 cents, pretty much paid the same price they were going for after Tuesday, Wednesday, Thursday. So the fact that they should have depreciated, even though we paid the same price, we still paid a little premium. But given the spreads on everything, you saw the same thing across the board on all of the Home Depots. And that was something interesting to watch. All of the premiums really shot up. So Home Depot has a lot of IV, more than it usually should. And it could move a lot and it had a big bounce, so it had meat on the bone. So I had those. I'm still holding those. And then I sold that 235 SPY play like we said. And then I grabbed an April Costco. We did that for earnings. I just flipped this one out. I was going to hold it. I said it was actually for my mom's birthday. I like to make YOLO plays on birthdays for some people. So my mom's birthday was coming up. My brother said we should do it. We had a joke about Costco, but I even didn't. I justified it somehow, and that's why you should never copy YouTube people, because, like I'm saying, that could be the logic for the trade. I grabbed 20 of the 210s at 50 cents. We grabbed those middle of the day, and again, Costco ran into the same problem. There was a both lack of liquidity and earnings premium. Even the contract, the problem was I grabbed those. Every contract above and below at the time was already up substantially by the time I made those. But again, you're seeing both the lack of liquidity, the premium there, but I bought 20 of those, but then I sold 13 at close at 88 cents or so to get my initial investment back. You could have also ghetto spread of those, so they were up a lot. That was playing the IV run up as well, and then Costco started dropping and the IV came up with the market. So Costco had earning, and then the premiums kept running up with the market, but then I grabbed Myrna. We were listening to the Pentagon thing in the morning or later in the day, and he brought up some stuff. It was pretty interesting, and he said something about Moderna in an approval. And that was kind of the first time I saw it in an official sense. But take a look. Why would I spent a lot, and I was kind of surprised with myself, but I like the price proposition in this type of play now. And we even made another drug play that I'll show you, but we got the 38 calls. I got 2 of these at 192. So they barely went up there. But what you could see is, take a look, Myrna had that huge run up. It came down. It even had this big jump up from 18. And yes, some people, you could have been in it, if you're in shares, that's awesome. But depending on what price you paid, if you bought it during any time of that hype, the fact we got it at 198, we stole it. We're able to get in super late to this whole medicine party. The stock already made this move, but you're seeing only things that are close to the money or stayed in the money. Those are the only things that had value. Or actually, no, these were even in the money and they lost value. So at the end of the day, these things were still kind of in the gutter. We got filled. You got to be careful with those. I said definitely don't trade these wide spreads, and you could, look how tight it is. And it's just all with these IV, with these medical companies and all this. It's a messy route to play. So that's why I really didn't like playing them even till today. And then finally, I was interested in this play again, though. I said to just stay away from this thing because it's going to be very, very dangerous just because of the wide spreads. It was going. They got halted. They have something about the vaccine or drug thing, I believe. What was it? Yeah, they got the news that they're making the novel coronavirus test available on Thursday, I think 6 p.m. So now it's available. So we'll see. You'll probably get data on there, but it looks like they're the ones who got kind of the approval there. It's hard to say. Again, there's a lot of different companies in the mix, but Laboratory Corp's, they have a good reputation, and you can see it. It doesn't have that same hype premium, so the spread started going crazy. That's why I said be careful there. Whoa, we didn't get the 220s. I was like, who paid that much? We got these ones. We got far out the money. We got 260s for April. I got 2 of these at 60 cents. Again, big spread. It was wild all across the board. These are even brand new contracts that they actually put out today, which is interesting. That's why there's no open interest, and that's why the spreads are wild. So I bought those, just holding those, but I think that'll be an interesting one over this next coming days, especially as we get updates. But that was pretty much it. Now, as far as everything else that I'm going to be looking at tomorrow, our Googles came back to life. I'm up on those. So that's one, considering how much we went down, even though I like the Google play, it's clear that I paid a lot because it's just barely coming out of the gutter after dropping $63. So that might be one I would take profits if we go up on it pretty fast. I'm still holding those Netflixes. Those kind of came back to life, break even. I'm going to keep holding those because I still think there's more meat on the bone, but Netflix has been pretty good. We have those UVXY, so I have a weekly expiring tomorrow on that one. We bought at the beginning of the week. That one's up, but then we have those June UVXYs that we got at the beginning of the week. So again, I got both short-term exposure for the weekly, spent money. Those went down, and then actually, no, those ended up, I think it's because of the spread. So the Marches are still holding up, but then the ones we got for June, we got those $80 calls at 30 cents, and now they're like 50 to 91 on the spread, but they were up at like 70 or 80 on the bid. They went up about 200-300%. And then those Netflixes from April are still just barely up. But I'm going to be watching that. The UVXY is at an interesting level. It could be a good one to play tomorrow with the weeklies. However, sometimes playing individual companies might be better. We have that UAL, and that's another one. We grabbed that March 20th one. So we closed out of the UAL ghetto spread. I closed that out because I hit the max gain of $2,500 on it. So I said, all right, we'll dish it. I got 23 out of $2,500 max gain, which was kind of wild on a debit spread, considering it was just because the volatility was so high. Usually we would have only got like half of that. So I was pleasantly surprised. So I took it. But now we're still holding that other March play. And that was one. We got short-term exposure on it. It was a little bit cheaper. and that was to play any more downside. But we bought that yesterday at like, what, 54 cents or 2 days ago. It went up 50% total, so that one's still kind of expensive, and you could see we took that risk to not make as much, so that might be one I'd want out of. But watch that, and a lot of people want to play. You guys want to play some of these travel companies, UAL, transportation, anything with hospitality. They're good plays, even the casinos, but they're expensive right now. Everybody is pricing them in, and they're definitely outpacing and diverging and just terrorizing the market. Again, this is another divergence between transports and the S&P, just like we see with financials. And then again, you see the SPY is not caught up with a lot of different industries. So again, tech is pretty much the thing holding it up. So I'm going to be holding that. Same thing with Starbucks now. We got this play yesterday, but you see it's diverging. However, we went up 100%. We got a decent position on those. But why I like this is a key support level. This is even from one of their earnings. So if they drop below here, it's going to start getting ugly. But then one thing you notice here is October, November, stocks are back down to these prices. Starbucks isn't. So they actually got more meat on the bone. If anything, they're lagging. But now you see how they're kind of breaking below their own little woo-ha zone. So we're holding those Starbucks plays. Those are up from yesterday, 100%. We got the 55 puts for May. Again, pay attention to the time frame. And then we grabbed HD. So we talked about that play, the 165. This is the one I said I'm going to hold. I like them. I'm going to hold them. We could ghetto spread them, but I want to see because this is clearly lagging. So depending on what happens to the market, they could have a lot of meat on the bone, and we will see what happens with them. But I'm going to plan to hold HD and Starbucks a little longer. If anything, I might cut the positions. If they go up another 100, 200%, I might sell one or two contracts to get my money back and then ride the rest. Then Bank of America, the straddle. Again, this play was down yesterday on both sides, both calls and puts. Now today, the calls were down 50%, but they only closed down 25% off of that little move. So that's telling you something about the volatility. But that May straddle we got, the puts are up 120%. So I'm up now off of the $1,200 investment, $570 total, 50%, because the puts are up and the calls are down. But I'm still holding that. But watch financials because the banks are definitely making big moves. Then Clorox, they went up, but even as they started to go down, they reacted to the positivity in the market a little better, but they dropped. But that play we averaged down to, the 135s for April, they went up 25%. They were up 50% at one point, and then the other 130s, they closed down 13%, but I'm still holding those. But they were up a little bit today too. So this is just volatility. That's why the best way to at least, you could lose on them, and the way we're keeping ourselves in the game is by having time. But I still think that's a lagger too. If the market gets broader exposure, they're going to come down. But then 3M, similar situation. They were actually going up, and they were positive. They barely closed, but even as they were positive, those plays went up, and those plays were down yesterday. That April 17th, 105, those are up 80% now. So that might even be one I want to get rid of as well, because you see we got those a little bit late, but they're not giving us a lot of premium. They're going negative, positive, negative, positive versus, being up on the TLT where we're still up and holding up 700, 1,000%. It's a whole different story. So those are going to give you more risk unless you see big volatility, and that contract was actually pricing wrong because we're going to see more downside. And again, that's in reference to it because it's a put. So there's that. Then we got the mRNA, watch LH, and also, like I said, just watch the SPY with those plays and understand how to recycle and how we even took advantage of the ghetto spread to sell even some of those calls, secure profit a little bit on the upside, and then now still separate it where we're getting more exposure with time. Swap out one bad play, get a better play. Turn one play into 10 different plays while still paying yourself. And then finally, like I said, we're going to watch HD, and now McDonald's and Walmart's are two different laggers. So I'm looking at contracts that I've been holding that I already made free, and I'm able to watch the percentages. So those McDonald's March 175 puts, those are up 600, 700% now. They were only up 100% in the morning. So you have some things lagging. So those are fragile contracts. Those might be plays I'd want to double dip on if we see a frog opportunity. And then the same thing now with Walmart. The put play we have since that earnings, it's only up 100% on some of those Marches. So by seeing my losers and seeing some plays that you would expect to be up a lot more, I'm getting to see the prices I paid and when we bought them. So that's giving me an idea of, well, what's relatively cheaper? What can I get that still has opportunity to move a lot, that I've seen move a lot, but that is kind of came down and is just more fragile. The time decay, those are going to be the higher risk, high reward plays. But those are what I'm pretty much going to be looking at. I hope you guys stay safe. Don't go too crazy. Stay calm regardless. And as you can see, even we made money both ways, down, up, everything. Just don't give up. Don't panic. Control the budget and put yourself in win-win opportunities, babies. But that is your watch list, ladies and gentlemen. gentlemen, make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need your helmet on. This is the time to use your head. Don't let the bad thoughts and doubt and irrationality get to you. Don't get the fear. It's all numbers, baby. Just control what you got. Look in the mirror. Look at your balance. This is your time to fly and learn. And again, it doesn't matter if you're making money, losing money, anything. You're learning something. This is once in a lifetime. We haven't seen volatility like this in almost a decade. You're seeing something, history. You're watching macroeconomics. Just be in the game. Your opportunity will come when it's your time, and protect the money if you have it. It's free long-term stocks. It's a free down payment. Do whatever you need to do, baby. I'm going to see you in the morning. I love you all. Stay blessed. God bless you all. You guys are the best. Shout out to everybody. Shout out my OGs. I'm going to see you in the morning. Let's go.